On the podcast with us today is Derek Baker. Derek, welcome to the podcast.
Thanks, Dan, for having me today. Appreciate it.
Derek, I want you to get us started and share with us a little bit about you and your background and especially within this multifamily space as well. Because I know you're fairly new, so this is going to be a great deal that we're going to go through from somebody who it's really been your first deal. So dive us into a little bit more about your background.
Sure. Born and raised in Michigan, went to Michigan State, graduated in 2010, mechanical engineering. I was going through college during the 2006, 7, 8. So job opportunities weren't plentiful at that time. So I actually took my first job in North Carolina at United Technologies, previously GE, as a manufacturing engineer. And then found my way back about a year later to Chrysler, where I was a release engineer and worked there for about 6 years. And then just recently, in 2016, I switched to GM, and now I'm an internal investigation engineer for them, which is a pretty exciting role. But me and my wife really looked at, we heard real estate. My wife's cousin, Brian, is actually kind of the main reason why we got involved in real estate to begin with. He has a small portfolio in Grand Rapids, Michigan, which is a pretty good area to invest in the Michigan space. But really, it was Grant Cardone and Michael Blanc that kind of got us into multifamily and more than just the single family. We first looked at single families and then realized we were going to have to put down this big down payment, and it was 100% occupied or non-occupied, and it just didn't really make a whole lot of sense. So we kind of held our cards tight for a couple years, and then in 2018, just past year, we found this deal.
And this is a 23-unit deal, which is located about an hour and a half away from you right now, and it's located in Jackson, Michigan, correct?
Correct. Yep, exactly.
And you closed on this one in September, right, of 2018?
Yes, in September 24th, actually. We found it on Craigslist, believe it or not, in April, and it took us about 6 months to close. Being our first deal, I didn't think that was too bad. It felt like it lasted forever, but we actually acquired it through a land contract. And the owner actually still has an existing loan on the property. So we actually had to get the bank to sign an estoppel certificate in order for us to, for him to sell something and still carry a note on the property.
Wow, this is going to be interesting.
It's from our first deal. When I underwrote it, the numbers made sense from just a straight buy and hold and cash flow day one, which was awesome for our first deal. But yeah, it took us a while. It took us like 3 months to get the bank okay with. We hired a real estate attorney to go through all the details on the estoppel certificate to figure out what exactly needed to be put in there that allowed us the right to purchase the property without actually making the note due. So.
Yeah, so we definitely need to get into that because that's something that's going to be I'm very curious about.
Yep.
As far as like finding this particular deal, you said you found it on Craigslist. Now, was it actually listed with a broker?
No, actually, I know the document that I sent you is Marcus and Millichap, but they actually were there the day we went and met with the owner, Jim, and they actually provided him with that. So they had come out before, took some pictures, did some analysis, and then gave him the booklet, but he did not. It was kind of a trial, like, hey, we can list this for you, but the owner wasn't really interested in it. I mean, the deal cash flows, so it was good income. He was just looking to relieve some funds to do an experimental project, an invention that he was looking at doing to free up some cash. So he didn't necessarily want $500,000 right now. So he's all good with a nice cash flow coming in for him. It's great. We love it as well.
So let me ask you this. So at what point did you actually tour this property?
So we found it on Craigslist, reached out to Jim. It was April, so probably a week after we had talked to him on the phone. We set up a time to meet him on site. They have an office on site that's actually our property management. He runs a number of probably about 400 units. He has a property management company that he runs out of there, and it's right on site at our property. So we went over there, met with him, and went through the units, kind of got a feel of what it was, and kind of fell in love with the numbers before I fell in love with the actual property, right? Because it's not necessarily we're like $450 a month. It's our working class folks that live there. So it's it could get. Yeah, it's a C-class property, so I'll leave it at that.
So when you first walked this property, did you find anything during this initial walk that you kind of raised your eyebrow a little bit on it? Obviously, you kind of mentioned it being a C-class property. So would you say there was a few things that you found during that initial kind of walkthrough?
Yeah, I would. The first building, or the largest building, that has 11 units in it. It actually is, I think it was built around 1900, 1910, something like that.
Wow.
So I knew when I looking at it, the foundation and everything looked good. And now that we've got it inspected, it's fine. But I was worried maintenance wise, right? That the property is dated, going to need, some maintenance in the near future. The roof on the place was 40 feet off the ground. So I was going to have to find someone that with a big enough ladder to even get up there and take a look at this thing. So the roof's flat, and it was a flat roof. So I was a little bit concerned about that. Other than that, it was in pretty good shape. The previous owner had it for 2 years before we had it. And he'd done quite a bit of renovation as far as siding, some aesthetic things, and they put a lot of money into put a boiler in before we purchased it. There were a number of items because it is an older complex, but other than that, it held its own. So,
mm-hmm. What was the purchase price on this one?
It's $480,000.
And were you competing with offers with anybody else, or was it just pretty much you since it hadn't really been listed yet?
Yeah, no, we were. Jim didn't mention there were anybody else that even looked. It was been on Craigslist for probably 2 months, he said, but it just didn't have the marketing, to really raise anybody else to come in. And I'm kind of glad, because I think it would have got scooped up pretty quick from a cash flow standpoint.
So let's discuss the financing around this one, because I'm really curious as to. It sounds like it might be a little bit hairy, so let's dive into that. So when you talk about him holding on to a note on the property, does that mean that you were able to do some seller financing with him, or how was that structure set up?
Yeah, so being first time multifamily, investors, we went to a couple banks, credit unions, and they wanted minimum 35% down to allow us to get in. And me and my wife are both engineers. We make good money, and we just thought, wow, this isn't going to be able to happen. We don't have enough money to get into the space. And then we mentioned it to him, and he's like, well, I'm not necessarily looking for $480,000 right now. He goes, I would be, willing to hold back, 80 up to 80%. So we agreed on 20% down. And the biggest hurdle that we had to do was the estoppel certificate. So like you mentioned, it had an existing note on the property. So we had to get the bank to sign off because his loan is actually at 3% that he signed on. So it's great interest, and we were going to really get drug over the coals with the bank or being brand new buyers. So we really wanted to get a hold of that, hold on to that 3% as long as we could. So we agreed with him at 5.5% interest and seller finance deal. But getting into the estoppel certificate, so I had my real estate attorney. I met with him, told him the situation. He's like, "Well, we got to get the bank to sign this agreement that that allows you to purchase this property, and they don't do a due on sale clause, and immediately make this. You gotta purchase the note, right? We want all our money right now." So we met with the bank, or the local bank, the president, and we went through a lot of iterations of back and forth of verbiage on the actual certificate, on the estoppel certificate, and eventually in August, I believe, end of August, we came to an agreement. Everybody was good with the verbiage, and we were excited because we thought that was definitely going to squash the deal, because it turned into just a back and forth for a while, for at least 2 months, because they didn't want to sign up for certain things, and
So on this particular property, I just wanted to kind of get the structure set up. The seller had a loan already on the property, right?
Yep.
And so in order for you to be able to get new debt on the property, to be able to acquire it from him, he wanted to keep his existing debt on the property, and then you bring on new debt onto the property.
Right.
And you're basically paying the seller for the percentage that he's allowing you to keep, and then he's paying his own note off, right?
Yep, exactly. Yeah,
Okay.
That's right.
And then is there a certain point in time in the future that, what was in there where you were able to get out, or was there like a certain balloon period, or?
So there's a balloon. It's still 4.5 years away. But there is a balloon on the property. So the details are, we're signed up at 5.5%. It's a 20-year amortization with a 4.5-year balloon, probably about 4 years now. 20% down, and then we kind of worked in the deal that the seller also has the property management. So we agreed to a 7% property management fee, and it's on site. We couldn't even think about. I mean, it was a no-brainer for us to keep what was already in place from a management standpoint. So it was a kind of a package deal, right? That it was a give and take. We were going to give you list price, but he wanted a little bit more for the PM percentage, but we got it to 7%. So
Mm-hmm.
I was really happy with the overall deal.
Yeah, and especially because you pretty much, like you said, probably have that on site because he's there on the property, right?
Yeah, he's there. Now he runs he has an office there. It's actually a 1-bedroom apartment that they actually give us rent for, and they're our property manager on site. He has his office there, but our actual property manager, Jana, is there in the front office, kind of the living room, I guess you would, but they turned it into an office. And she's really kind of the mother hen of the whole place, knows everybody by name, and is really the nuts and bolts of the whole. I mean, she's the glue. She holds it. It's priceless to have her on staff.
Mm-hmm.
Yeah.
I'm just trying to figure out why the seller didn't just try to do like a refinance or something like that, or was it because he wanted more of the equity in order to do that?
I don't know. Jim's a accounting major. He's been doing this for a long time. I think he's got a motive. I know he wanted to. He's kind of in the process of selling a couple of his properties to, like I said, do this new invention that he's working on. And he's looking to switch from multifamily to kind of the commercial space, like the strip malls and stuff like that. So I don't know exactly what the motive was. That and the fact that we built a rapport with him from day one. Me and my wife went over there and told him our situation. We're new, we're engineers. We're getting into this space. We love the 16 plus unit apartment complexes, and he's really actually turned into a mentor. I mean, I talk to him more than I talk to my property manager, at least weekly, a couple times a week. Just from he's done it. Not the syndication part, which is what my next steps are, but from a multifamily, that's his whole career. right? So he's really taught us quite a bit. So I don't know if he was doing it as a, to help us out. I don't know, win-win, I guess, I like to put it that way, but he's happy, I'm happy. So.
Did you have to get approval from the original lender as well, from the original debt, or is it just the new debt on the property?
No,
the seller's debt.
No, just the seller's debt. Because there's only the one loan on the property. The second one is being held by Jim, by the owner.
Okay. But I'm just saying that obviously you had to get the new lender that you have to be able to buy the property to approve it with the estoppel certificate, right? And so was the prior lender that Jim has, did he also have to get approval from his lender as well?
Well, I guess so. I don't have a lender.
Oh, okay. So it was just him is the only one. He's the only one that has the note on it. Okay. Because he was able to do 80%. You guys brought the 20, and then you only have one loan on it, which is Jim's loan.
That's exactly right.
And then the balance between the difference, but the spread between what the balance of his loan is plus the 80%, up to the 80%, is a note that you are due to Jim personally, which is at the 5.5%.
Correct. Yep.
Got it. Now that makes a ton of sense. For some reason, I was thinking that you had a note on top of it, plus another note, plus the seller financing. So I was getting a little bit hairy there, but now I understand what you were talking about.
We're clear.
Yeah. So you only have one payment that you make to Jim, and then he makes his payment to his loan that he has with the bank, and then whatever. And then
that's right.
Okay. All right. That all makes sense now.
Did
you have to raise any outside capital, or was it just you and your wife?
It's just me and my wife. We purchased our home in 2011 as a foreclosure, and we took a second mortgage out on it because it's amazing how much has gone up in price. So it helped us out. It supplemented it, but we've funded it ourselves.
Sure. And when you were initially doing the negotiating with Jim, did you have to put up any earnest money to kind of reserve it after you've put in your offer and stuff like that?
Yeah, so we did the standard 1%. So we wrote a $4,800 check and held it while we took the probably 5 months of inspection. And we're brand new. I didn't have a mentor at the time. We were just kind of going off the cuff. I mean, the seller was kind of the mentor, but I kind of held my wits about me because I was like, well, it doesn't. It's like, oh yeah, do this. Well, is that in my interest really, or your? Like you kind of need a third party, which we didn't have at the time. So I just used whatever I could from videos and books I read, and it made sense. It made sense on paper. Like I live in Excel. I'm an engineer, so I knew how to run numbers and spreadsheets and stuff like that. So it made sense. It was the right thing to do. It was just, yeah.
So both you and your wife are working full-time jobs as well as doing the multifamily stuff too, right?
Yeah, I'm full-time. My wife is part-time. We have 2 little girls and a boy actually due in April. So
congratulations.
Thank you. She, my wife was full-time, and as we've had kids, she's kind of stepped down to be more time at home. We have a lot of support from the grandmas to watch the kids, so we're really fortunate with the situation.
Yeah, well, that's good. That's kind of neat.
Yeah.
And your wife, you said, is an engineer as well?
She is. She's a GM. She's been there since college. We work about 100 feet away from each other, and we ride an hour to work each way. So 2 days a week. Works out really well.
And so do you work from home most of the time?
Some days I do. I have a pretty flexible schedule. I do a lot of conference calls and things because being in a internal investigation, we have to collect all this data from an incident or a problem that's happened with a vehicle, and all those people are spread out. I mean, they're at our proving grounds, a half hour away, or they're in a different state. So I'm able to work remotely whenever I need to or whenever I can.
Well, let's talk about some of the returns on this particular one, because obviously there's no investors outside of yourself, but we can still talk about returns, right? So
Sure.
How far out were your projections when you were looking at this? Because obviously this is going to be a buy and hold strategy. So are you planning to exit this at any point in time?
So the biggest thing for us was the balloon payment. we're like, all right, what should we do with 4.5 years? Does it make sense? The plan for us is to refinance at that time. We're already working to raise rents and kind of improve the property to add that value, to then, make it clear for us to be able to refinance right around that balloon, to then just hold on to the property. Because our overall goal was to help with kids' college and bills in the future that I didn't foresee myself being able to pay. So that's why we got into real estate, to help us out with some additional cash flow, passive investment. So,
Are you planning on putting any capital expenditure into it?
we already put a roof on the older building, the flat roof. That was negotiated in the purchase price, so we knew that was a problem. But other than that, there are some self-storage units on the property. There's 3 units that we could. They need a little bit of work, so I think we may put some capital into those. Other than that, it's just ride it out.
And what's the strategy as far as being able to increase the rents? What's your plan? Like, where are they now? Where are you guys thinking that they can go to?
So we're comfortable at, we're already at 1 unit's at $600 a month. That started at 5. We've had quite a bit of turnover since I joined. I'm not sure why that is. The management's the same. It just depends. I mean, we've had a couple of long-term tenants, 12, 15 years. They're like, oh, time for us to leave. So, but I looked at it as, they're at like $425, $440 a month. It was a great opportunity to raise rent. So we have a lot of long-term tenants that they go 12 months and then they go month to month after that. And, they really hadn't worked to drive the rents up. They were kind of, it was really a passive approach. And I was like, well, where we are with the comps, where can we go? And we started looking at it and we're like, we could easily get to the 600 mark here. So there's quite a bit of meat on the bones. That we're at average is about 450 a month. So there's at least most of the units, we have 6 2-bedrooms and 17 1-bedrooms. Mm-hmm. So, I think we can get to 5 to 550 on the 1-bedrooms, and then, at least 600 on the 2-bedrooms to stay in comps.
Okay. And do you have projections kind of spread out of, like, once you get it to that bump, what's the difference, where is the NOI now? Do you have a projection of where the NOI will be once you're able to do that?
Yeah. So I have, I don't necessarily have where we'll be at the end. 'Cause like I said, I purchased, so I'm kind of learning as I go. So, sure. We bought it at a the NOI right now is about 25,000 after debt service. So it brings in a little bit of money where it's at. Actually, it's a good amount of money for what, for us. But if we drive the rents up 100 times 23, it's going to be quite a bit. But I haven't necessarily looked at where we're going to be at, at 4.5 years or so.
So I'm just kind of looking at your spreadsheet too that you have in front of me, and it looks like you have the debt service is 33,480 or something like that.
Yep.
And the cash flow after the debt service is that almost 25, so that 24,186.
Yep.
The NOI right now you have at 57,667. Is that the current one?
Yeah, that would be where we were when we purchased the property.
Okay.
So we're above that now.
And you said you're going to try to get the 2-bedrooms to the 600.
Yeah. Yep.
The 1-bedrooms are going to be at where?
It's 550.
550. So on average,
small.
You're probably going to be close to about 575 across the board for all the units.
Exactly. Yeah.
So if we just kind of extrapolate that out a little bit, do the 575 times the 23 units times 12, that gets us at 158,700. And you're at 50% expenses right now. So that would bring the NOI from 57,962 to 79,350, and that doesn't include any yearly increases or bumps that you could possibly do between now and then either. Just kind of these are just kind of some rough numbers.
Yep.
Do you know what the cap rate was that you purchased this one on, the entry cap rate?
So Jim so Marcus and Millichip rated it like 7.5.
Mm-hmm.
But we purchased it. It was like a 12 cap. That's how it worked out to be. That's what he really advertised it to us at. So,
so if the NOI is at the 57, yeah, you'd be at pretty much close. You'd be pretty close to that 12%. So let's just take that same number and let me ask you this. If you were to exit this in 5 years, do you think you would still have to exit at a 12, or do you think you could actually go a little bit better than that? Like, what's the market cap rate right now in that area?
Market cap rate's like 7.5.
Wow.
Yeah.
Well, let's just pretend that we're still at the 12. Just for sake of this experience.
Correct.
So that brings it to 661,250. So that's an increase in valuation of approximately 181,000.
Yep.
250. And your investment into it for the down payment was right at about 75.
Yep.
So I mean, that's a phenomenal return. Obviously, if you can get that 79,350 at the 7 cap rate, it's at 1.13 million.
Yeah, that's where it's like, we had the market, the OM says that, and it's like, well, I don't, who knows, right?
I think you also have to kind of look at that and go, this was Marcus and Millichap trying to sell it to this seller that they could get a higher price and let them try to sell it for him and market it for him. And maybe he would have been able to get a bigger or better price and lower cap rate. But at the end of the day, you bought it at 12. And even if you exit it at that same cap rate, because I don't think it would actually spread higher than that on that particular purchase.
Right.
If you bought it if you sold it at that same cap rate or refinanced it, if you will, at that same cap rate, you could probably still recoup your initial investment into it, even at that 5-year mark or 4.5-year mark.
Yes, right. That's really our goal, right? Is to get be in it for nothing, right? And at the balloon, that would be ideal.
Because at that refinance period, you would be able to use the equity that's built up into it to be able to have that. Even if they wanted 35%, you could probably still do that, but you could still probably get it at 20%. Now that you have a little bit of experience managing the property, refinance it, get out the other note to Jim as well as his original debt, and then pull out all your initial equity and just hold on to it and cash flow it.
Absolutely. That's our long-term strategy.
Yeah.
Absolutely.
Great. Well, hopefully I was able to break that down a little bit and figure out what everything is on here, because this one's a little bit different when there's not any other investors. So you're not having to raise capital, you're not having to split it with anybody. Yeah. This is just you and your wife's deal, which is great.
Yeah, that was the big thing was if we ever wanted, talking down the road, or not down the road, but now where we are now is in the syndication space, and that's where we want to go next. You gotta have some experience, and if you tell somebody, I'm a mechanical engineer for the automotive industry, well, that's good and great, but if you don't know how to or anything about real estate or managing properties, I mean, they're not gonna hand you over $50,000. So we wanted to this is our education, this property. I mean, cash flow is great. It was a great, we found a good property here, but if anything, it's a learning experience for us. It allows us to. We've learned so much since September. It's unreal. Now that we've actually owned the property, we have to make decisions, and figure out a strategy to add value to the property. So we can ultimately, increase the NOI.
What was the occupancy of this property?
It's right around 90%. 90%.
Is that where it was when you occupied it, or is that where it is now?
It's about where it was. We usually hold about two units, 2 units empty at a given time. Mm-hmm. I know at first I was like, we got to get 100%. We got 100%. Well, and I've heard, I've read even at 100%, technically losing money, right? You need to adjust your rents and everything to keep it right around, the 90-95 mark. So yeah.
And is that a physical occupancy or economic?
Physical.
Okay. Where's the economic occupancy?
Um,
Do you have any people in here that aren't paying that you're having to, start to do an eviction process or anything like that?
yeah. So in the class of tenants that we have, we've evicted 2 people since September.
Okay.
So yeah, it's lower than that. It's 75% probably 80%.
Yeah. And I'm sure you probably took that into account when you're underwriting and stuff too.
Yeah, for sure. I mean, we meeting with them over the multiple months, they got a good feel of how many evictions have they gone through? Are people paying rent? Some folks are on a 2 times a month payment plan. Really, they can't pay the whole month, first of the month. So we knew there's there's going to be some hiccups, I guess, if you will, economic vacancy issues. So.
Yeah, for sure. Well, I have 2 questions that I always like to ask at the end, and it's just they kind of are tied back and forth together. But what was something that you found easy during this entire process that maybe in the beginning you thought would be a little bit more challenging?
The whole closing, or trying to just trying to purchase the property, really. I mean, I thought it was going to be fairly easy to go out, like a home, go out, get a loan. I qualify for this, whatever. But they, and reading a lot of books and stuff, it was saying they're going to look at the property first, and then they're going to look at you. But they were really looking at me quite a bit, because I'm risky. I'm a new buyer, and that really took a lot of that took a lot of time for us to absorb and say, all right, what are other strategies that we can come up with to purchase this property? Because we want it, but I'm not going to, I'm not going to do something that I'm going to regret down the road.
So was that process, and did that process end up being a little bit easier for you, or was that more of like the thing that you thought was harder than you thought?
Yeah, it was definitely harder than I thought. Right, I thought I was going to go in and say, hey, I need, I want to purchase this property. Here it is, and it was difficult, right? Because we ended up having to do all these different agreements and estoppel certificates to then sign the loan. So it's like, all right, we can't get a loan from a bank, but then all right, now I still have to deal with another bank because I have to get their we have to get their approval to allow Jim to sell the property to us. And it was like, it kind of eluded it quite a bit, and it really caused a lot of headache. That's why it took us so long. I think we would have been closed in a matter of a couple months if it was a normal bank loan, just take it over and purchase the property. But it really, really slowed us down.
Did you find anything easy during the process?
So yeah, something that I thought was going to be difficult, and it turned out really easy, is the management portion of it. Having the on-site manager at this size of a complex is huge, especially with the tenant base that we have. Like I said before, Janet is like a mother hen there. She's really taken the stress out of things for us. She knows our situation. I thought it was going to be pretty, I was going to be a lot more involved. I can be as involved as I want to be, but she's been doing it for a while now, and she really makes it easy on us, and it's worth every bit of the money that we pay. That was the big driver of going for over 16 unit property, as Grant Cardone would say. You go over 16 units, that way you find it makes sense mathematically that you can have property management. Well, we are also fortunate to have property management on site, which is huge, because when you have folks coming in physically to pay for their rent in person, they're either bringing cash or they're bringing a personal check or whatever. We're not doing anything through an app or anything online. it's crucial to have that, and she's really made it easy for us.
Mm-hmm. Well, good. Well, Derek, I don't have any other further questions. This has been and this has been a very interesting podcast interview, because it's has a lot of different pieces to it, a lot of different nuances when it comes to the seller financing and working with the seller's, original lender and various things like that. So I appreciate you taking some time to be with us here today. How can the listeners reach out to you if they have further questions about this project, or maybe even some future projects that you may be, looking to raise some money on in the future?
Yeah, absolutely. So we have Jamteen Investments. So you can email me at Derek, DEREK, at jamteeninvestments.com. It's JAMTINE investments.com. Our website's jamteeninvestments.com. We look forward to talking to whoever wants to reach out. I will answer any questions. I'd love to connect. We're new to the space, so we're trying to build our network as quickly as we can. So.
And Derek is also on the Multifamily Investor Nation Facebook group, so you can always reach out to him there. And again, thank you so much, Derek, for being on with us. Look forward to having you on a future episode as you close another deal.
Thanks, Dan, for having me today. I appreciate it.
All right. Take it easy. Bye-bye.